Hello, I am re-recording this Earn While You Learn video simply because I have a whole bunch of new information that I believe will be of great value to you and that you can learn and take with you. Okay, let's get into it. So, as a real estate investor, you've probably engaged many real estate mentors and gurus for your real estate training and education, which is fine. I have engaged the services of Michael Blanc, Grant Cardone, Jonathan Twombly, Robert Kiyosaki of Rich Dad Poor Dad, Ken McElroy, just to name a few. Okay, so I'm not against real estate mentors and gurus. These are all great guys. They have great programs and everything. You know, you're paying them for training. You get the training videos and the memberships. You get to join their groups. You get to network with the other investors in that group, and which is really recommendable. I have networked with several members in each of these people's groups and have made money with them and done deals and business with them. So definitely, use the network and uh, connect with these people. Okay, but uh, several months ago, I was thinking about starting my own syndication or a debt fund. And as I started shopping around for people to help me with this, I learned that they charge about, you know, 20 to $80,000, depending on who, right? Who you go with. And I thought, well, if I had 40,000, for example, I would use that for a down payment on a property. Why would I pay somebody to start a syndication and have to go through all the paperwork and the pain process of getting licensed and qualified with the SEC, the Security and Exchange Commission, when I can just use that cash and just apply it to a property and get involved? So if you're a new investor starting out, you may consider this. You may want to just put a hold on your dreams, not give up on them, but just kind of put a hold on it and get a property first, get some experience, get some cash flow going, and then you can always revisit the debt fund or the syndication at a later time. So as I got to thinking about that, I thought, well, most real estate mentors, they'll provide you with the training and all this stuff and the videos and the group and all that, but they don't really take your hands and walk you through each and every step of the process, right? So that's kind of where my Earn While You Learn came in, because I'm an underwriter and I'm also a direct lender and I'm also a real estate investor. So I do all three. And I thought, well, I'm willing and open to sharing some of my skills and some of my knowledge and help for investors that are interested. And so this is how I came up with the Earn While You Learn program. Instead of charging you a monthly membership fee, I would just ask you for so much money, and I'll talk about that here at the end of the video. I'll explain the programs and how they work. But your membership fee would basically go towards the loan closing costs, because I don't necessarily want your money. Okay, I'm not by nature a greedy person. It's not like I'm desperate or need anything like that. I mean, I do want to be paid for my services because I work hard. I'm very knowledgeable, and I've been doing this for over 10 years. I've closed over $6.4 million in real estate transactions. And so I've also had a lot of borrowers circumvent me. I would do all the hard work, find them a lender, get them all processed and underwritten, and then last minute they decide, oh, I don't want the loan, or they said, oh, I found a better offer, right? They committed financial adultery and went with another lender, and so that's just, sorry about that, folks. I'm a nice guy, but I don't work for free, so please understand that. Okay. um, with one-on-one, oh yeah, one-on-one mentorship, you're going to be working with me directly, because right now it's just me. I'm a sole proprietor. I just work from home and I work at my own speed. I have my own schedule. I can do whatever I want. And so, that being said, I do have a family, a beautiful wife and two teenage kids, wonderful kids, but they also want my time, and so does everybody else. They want my time and money too. So I have to be very, very careful with that. But anyway, if you sign up, you'll get my attention, my full undivided attention. You'll be working with me, and I'll be working with you. We'll work together, and we'll make you successful. Okay, we'll build your empire. All right. So you're probably wondering, who is this guy, and what's he all about? What's the scoop here? So here's a scoop. I'm willing to teach you how to analyze a property within 5 minutes. Now you're thinking, well, shoot, no way. Just hang with me, okay? I'm going to give you a live demo here in just a couple minutes here. Okay, I'm going to also teach you how to calculate the debt service coverage ratio, the DSCR, within 5 minutes as well. Debt service coverage ratio is the most important key metric for lenders, whether it's a bank, private money, hard money, whatever, institutional lender, direct lender. They all want to know one thing, the debt service coverage ratio. What is that? Well, it's that ratio tells the lender how much of the money that you generate from the property, the gross and net income, or I mean, sorry, how much the gross income is and whether it will service the debt. Okay. And then I'll also show you how to calculate the net operating income with limited or no information. Now, the demonstration I'm going to give you here in a minute is it has limited information that you're going to get off the website or that I got off the website. Okay. But the no information, I can show you how to do that, but I'm going to save that for training. Okay, I'm not going to cover that in this video, but I do have some tips and tricks on how to do that. Okay, so I told you that, I'm going to show you how to analyze a property in 5 minutes. So I'm coming up on, let's see here. I have got 6 minutes and 40 seconds. So 6 and 5, 11 minutes, 40 seconds is where I'm going to stop explaining this, okay? But here's this property, a 6-unit apartment in Tumwater, Washington, which is part of Olympia, Washington. It's kind of connected, and it's the southern part of Olympia, Washington, the state capital of Washington State. That's where I'm at, is also in Washington State, but I'm down in Vancouver. But anyway, so we have information on this property. It's a 6-unit apartment, large 2-bedroom units, including 5 updated units with kitchen appliances and floor coverings and blah, 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 which is nice to know. And it is important to know. But right now, as investors, we're only concerned about one thing at this moment, and that is the financials. Will this pencil out? Will this property be financeable? Okay, so let's take a closer look. Okay, so this particular website, which is onehomes.com, I don't know if they do other states, but I know that the realtor I work with, she sends me every Friday, I get listings of uh, various commercial real estate properties throughout the state of Washington. And so I kind of pick and choose some properties to work with and take a look at. So I chose this particular property here, but you can see here the rent roll here or some rental information. Number 2 makes $1,425 a month. The other 5 make $1,525 a month. Okay, so I calculated the rents. It comes out to $9,050 a month. Okay, and I multiply that by 12 months. I come up with $108,600. The expense ratio normally use 50%. Okay, so that helps me with my 5-minute analysis. I take the gross rent and I subtract 50% for just off the top for expenses, and then I have my net operating income. Voila, it's done. And then from there, I can start calculating the debt service coverage ratio, which I use a financial calculator for that. So the second step after you figure out the net operating income is to figure out the debt service coverage ratio. So that's what I've done here. At the time that I looked at this property in March, middle of March 2023, it was at 8.8% interest. So our monthly payment would be $8,187.24. Annual would be $98,247. Okay, this came out to a debt service coverage ratio of 0.663. Most lenders want to see at least 1.2. Okay, so again, the debt service coverage ratio is a simple ratio that tells the lender how much money is going into the debt. So 1.0 would be the exact amount, that $8,187.24 a month. That makes 1.0. That makes 100%. And then they want to see an extra 20% on top of that as kind of like wiggle room or some fudge, a little bit of room to fudge in case you run into some financial problems they don't have to sweat blood that you're not going to be able to make the mortgage payment. So that's why it's at 1.2 or 120%, because they want to make sure that the income that you generate from the property will cover the debt, and then you have a little bit, once again, some extra money to cover any emergency expenses or anything like that. And you'd be surprised, a lot of these properties, they don't a lot of property owners and sellers, they don't have any reserves for capex, which is capital expenses, in case a roof collapses, or God forbid, a water heater explodes or something like that, and you have to replace it. um, so that's something that you have to be aware of as an investor going in when you're evaluating properties. You have to look at all this stuff and make sure that everything is covered. You have to always think about the emergency situations and any unexpected events that could cause you some serious financial pain. All right. So I also have interest only on here too. Uh, and the reason why I put that on there is because sometimes you'll find a really smoking hot property, and there's a whole bunch of investors circling around this property like sharks. Everybody wants to get this property, right? And you want it too. It's a super awesome property. And so in some events, in some cases, I would suggest that you consider an interest only loan, or also known as bridge loans, okay? Now, bridge loans are not cheap. This particular one, again, the interest only rate was around 12%, and this is for experienced investors. Okay, if this is your first time into a property, the interest rate might be around 13, 14%. Okay, but this is for the best case scenario, experienced investors, 12%. Okay, so your loan amount, if you have a 20% down payment, would be $1,036,000 on this property, Tumwater 6 unit. And that comes out to $124,320 a year. And you divide that by 12 months and you come out with $10,360 a month. But remember, our monthly gross rent was 9,000 and some change, right? So obviously you're going to be underwater on this one. Okay. So there, I went to 12 minutes and 15 seconds. So I'm a little over 5 minutes. Doggone it. Okay, but anyway, I'm not feeling bad because I had to explain this. Okay. And when I'm doing this myself, I can do this in 5 minutes, and I'll teach you how to do it. Once you've done this about 10 times, you'll have this down in 5 minutes flat, guarantee you. Okay. But anyway, for educational and training purposes, I had to run a little over. But anyway, that's basically what it is. So you calculate your numbers, you get the debt service coverage ratio, which is the most important number, and that's calculated after you calculate the net operating income, because you want to make sure that the property will service the debt, the mortgage, pay your mortgage and stuff. Keep your lender happy. You don't want to upset lenders, okay? So that being said, the questions can arise like, okay, so is there anything I can do to get into this property? What can I do? What kind of options do I have? So I put here, well, there's 4 ideas to ponder. The first one, of course, number one, is to ask the sellers to lower the price of the property. There are several reasons why you want to do this. The number one reason is because most sellers, you know how people are. It's human nature. We want the most that we can get from the property, and we're in love with our property. This is an awesome property. I've done all this work to it, and it's just beautiful. It's gorgeous. It's sexier than hell. And that's how I came up with 1.2 million, 25 million for the sixplex, right? Okay, so okay. That's a little bit too expensive because, the interest rates are high. Can you come down on the price? Because most sellers, once again, they'll put their property in the best light possible. That means that the rents may not be at market rent value. Okay. A lot of these properties might be under market on the rents, so you could raise the rents. So in the past, I used to ask the sellers, raise the rents for me. I don't want to do it because on their little descriptions of the property, it'll say, you'll if you raise the rents, you can cash flow, you can make this thing cash flow. And yeah, that's true, you can. I used to think, well, the seller should do that first before they get their asking price, but not anymore. Now I'm thinking lower the asking price. You go in there and be the bad guy and raise the rents $50 per unit per month. And I don't have the exact numbers here, for this video, but I read somewhere that if you raise the rent like $50 per unit, you actually increase each unit's value by $100,000 over the life of the 30-year loan, right? So all that rent will add up. And so by immediately raising it $50, you've increased the value of that unit by $100,000, right? So not a bad idea. That's what you want to do. That way, if you are forced to sell it and you raise the rents, you know, at the time that you sell it, you can say, hey, I'm at market rent. This is what it sells for. This is what it's worth, and then you can actually have proof for that. Okay, it'll make you look. It'll put you in a better spotlight. Um, okay, another thing you could do is do comps on the property, see what has sold in recent times, and calculate the price per square foot. And of course, I can help you with that when you work with me. We can do comps and see if this property is, you know, around market value. Excuse me. If the sellers balk at your 50% expense ratio, then this is a really good one. This puts them on the spot. You just simply ask them, okay, well, have your CPA or your accountant provide me with financial statements. Because most of these sellers, a lot of them are older people, mom and pops, and they basically keep their records on a Word document or an Excel spreadsheet or maybe even a 3-ring notebook binder, right? So, you know, this is a negotiating point here too. You can negotiate, say, well, you know, I'm going to stick with my 50% expense ratio unless you can prove to me otherwise. Okay. So that's ammunition on your side. And a lot of sellers, if they're desperate or they need to sell or they want to sell, they'll come down on the price or they'll provide the documents. So yeah, that protects you too, so you don't end up overpaying for a property. Okay. So let's see here. I also wanted to show you another thing. I created my own spreadsheet, the super quick analysis, and this is part of my ammunition for the 5-minute property analysis. Okay, so as you can see here, it shows the asking price. I have an estimated closing costs of 5% added in there. I have the rental, you know, units, 4 units at $950 a month. This is Anchorage, Alaska, by the way. I have, as you can see here on the bottom of the screen, I have 4 different properties that I'm doing analysis on up in Anchorage, Alaska. I love Anchorage. I'm looking for property for myself, for my portfolio to add to that. So that's one of the reasons why I created this spreadsheet, because there's quite a number of properties up there for sale. And I want to make sure that, you know, obviously, like you, I don't want to go upside down or get, you know, have issues right off the bat. So anyway, it has everything here. I use the 50% expense ratio. I have my net operating income here. I even have on this calculator, I have I have it all built into the spreadsheet. So all you have to do is just plug in a few numbers and it spits all this stuff out, calculates it for you. But the cap rate is 3.64% here. Once again, the asking price and down payment, I would have to come in with 95,000 for this one. The loan amount I could get was be 380. You know, and sometimes you can wrap the closing costs up into the loan. Sometimes you have to pay it out of pocket. So I've kind of figured in both to help you prepare. So I'm going to go with the better number. I'm going to say that I can wrap my closing costs up into the loan amount. So I come out with 399. I used 8.5% interest, 30 years. My monthly principal and interest is 3,067.96. My annual amount is this much. I don't have property taxes or property insurance on this, so sometimes I'll do like a PITI calculation on this as well. And I can easily add this onto the spreadsheet, and I probably will here in the very near future. But this is also part of my secret sauce to make these 5-minute property analysis evaluations and calculations. All right, so let's see here. Let's continue to move on here. Let's see here. There's this onehome.com also had a calculator. They did provide property taxes per month and also home insurance per month or property insurance and utilities here. There's nothing on utilities, nothing on HOA. So sometimes that number is provided, sometimes it's not. But this 9449 is basically your PITI calculation. And again, I can work with you to help you calculate that, find it um, as needed. So we'll worry about that when the time comes. All right. I want to just continue on just very briefly. I'll teach you once again how to find lenders and how to talk to them. A lot of my clients, they come to me, they pick up the phone, they say, well, I found a property, I need $500,000 by next week. Can you get me the money? Well, I don't know. What's your credit like? Do you have a down payment? What kind of experience do you have? Do you own properties currently? Because you can always tell a rookie from somebody that's experienced. A rookie will just come out and say things like that. They'll say, I found a property, $500,000. I need it ASAP, right? So an experienced investor who has property, I'll say, okay, well, what's your credit score like? And, can you provide financial statements? Can you get me a personal financial statement? Can you get me your tax returns, your bank statements and application form and provide, if it's a refinance, can you provide me, your payoff balance and what interest rate are you currently paying and how much do you pay per month and who's the lender and so on and so forth. And they'll provide it. I mean, usually I get it within 24 hours. Bingo, we're on a roll, right? But for a lot of new investors, some of you who have no experience, you don't know what to ask or how to ask it. So that's where I come in. Okay. I'll help you and teach you how to talk to lenders and what they're looking for and how to work with them. I'll teach you how and where to find properties. Okay. So there's several websites out there you may not be aware of, other than LoopNet and Marcus Millichap. So I'm not going to go into that here now, but uh, there's a few of them out there that I'm willing to share with you at a different time. Okay, I'll also once again show you how to teach you how to size up a property within 5 minutes with limits, as I just showed you with this Tumwater property, or no information. But again, that no information is kind of a secret sauce, and I'm going to leave that for a different video and for people that join my program. Okay, I can process and underwrite your deals. Okay, so I am an underwriter and I'm also a direct lender. I work for one company. Um, this company allows me to underwrite and finance multifamily properties only from 1 to 8 units. And I can do basically every state except for North and South Dakota, Utah. Right now they're working on Oregon and I think Nevada. I think those are the 5 states I cannot lend in, but everything else I can, even Alaska, even Hawaii. Okay. Excuse me. I'll also teach you processing and underwriting tips and tricks that I've learned throughout all the years of doing this. Okay. And I've got quite a few, quite a few. All right. And of course, network. Networking is very important. When you and I establish a really good friendship and working relationship and we trust each other, I'll introduce you to all my contacts. Okay. And I'll definitely be happy to when and where the need arises. Okay. So anyway, that's part of the package. So that's pretty much there's more to the training as well, but that's basically an overview of it. Okay, I just want to briefly cover the packages. Okay, so first of all, I have the bronze program. There's 3 programs. The bronze program is basically no cost, but there's no training and no networking. It's basically just like normal. You call me up, you say I'm looking for this property, and I start collecting the documents. I underwrite it and and get you funded for it. But I don't share anything with you. I'm not going to teach you everything I know. I'm not going to hold your hands. I'm just going to ask you for documents. You'll submit the documents to me and we'll just close it. Okay. So it's just like any other loan officer or any other loan application that you've worked with before. Okay. I will be, I will require you to sign an NCNDEA, which is non-compete, non-disclosure, exclusivity agreement for 30 days. Okay. So What you're going to tell me is, what you're going to promise me is you won't shop around on me for 30 days. Okay. I don't want to disclose all my lenders and have you run around me and go directly to them. I've had that happen already. I had one lady in Oregon cut me out of a $10,000 commission check or success fee. I just lost a deal here for a guy that played the game with me. He didn't, he's an experienced hotel developer, and I was too timid to ask him to sign a fee agreement because he was so big, as an investor and experienced. And all the way up until the Friday, the day we were supposed to close, he was with us and providing documents. And then at the very last hour, he said, "Oh, I found somebody else to do the loan." So I lost out on a $1,100. No, that was more than that. That was a $5,500 check. So anyway, yeah, I'm sorry, folks. I'm a nice guy. I'm easy to work with, but I just can't work for free. I'm sorry. That's all out the door. So you will be required to sign this NCND agreement. Okay. Well, that's for everybody too, even silver and gold programs. Okay. The silver program, $2,500 one-time engagement fee. This is just one time. There's no monthly fees or memberships or anything like that. I deduct it from your loan origination points at closing or your loan costs. Okay. All right. Now, I know everybody's all scared of scammers, like, oh man, these guys are asking for upfront fees. I get that, and I've experienced it myself. I did co-broker a loan several years ago with a guy over in Connecticut, and he collected something like a 27, I think it was $2,500 from one of my referrals, from one of my clients, and he said, "Oh, I'll send you $700 as a referral fee." I'm like, "Cool." So he mailed me the check, but the check bounced, and when I went after him about it, he stopped answering his phone. So, there are scammers out there. So I learned, and I got burned pretty bad, and I felt bad for the client because they lost a lot more money than I did. But that was just horrible. Okay, so in order to protect both you and me, we'll deposit the $2,500 in an escrow account. Okay, and we'll instruct the escrow officer to just hold it in case, you know, uh, just to hold it until everything goes, if everything goes well. Okay. So it's refundable. This will be refundable if I cannot find you a suitable lender within 60 days and you provide me accurate, verifiable, up-to-date documents in a timely manner. Don't wait till day 59 before you submit the purchase and sales agreement or your credit report. Then, if you do it like say within 20 days and come day 60, I can't find anybody, then I'll refund you the money. I'll, of course, do all the shopping for you. I'll do the property analysis with you or for you if you want. I work with the processors, underwriters. If it's with a different company than I'm with, if I have to take you to a different lender, I'll do that. But I'm not underwriters for them. So, uh, but we'll work through all this, okay? And I also want to mention that if I do find a lender, even if you don't like their rates and terms, I still keep the $2,500, okay? Because I did find you a lender. That is my job, is to find you a lender, okay? Find you the capital. So you don't always get to pick and choose. They might have slightly higher interest rates, or their closing costs might be a little bit more. But if I find you a lender and you just balk for some odd reason because you don't like the interest rate, well, then I still keep the $2,500, okay? Because that's for all my work and time and effort into this, okay? Plus, when you in the silver program, this is where you do get the mentorship, okay? So you are going to get training, and I'm going to share with you my tips and tricks and stuff. So you'll have kind of my knowledge and experience and stuff, okay, as well as my possibly contacts. I may put you in touch with their underwriter, or if I go with a different lender than the one I work for and stuff, so on and so forth. Okay, so keep that in mind. And if you have any questions, I'll put up my information here in just a minute on the screen for you. Let me move on to the gold program. The gold program is $5,000 one-time engagement fee. This is the same thing as the silver program, but it's good forever. So if you want to pay 5,000 today, you can go ahead and send it to me, and then once again, it'll go into an escrow company, and then if you need 6 months to find a property, or if you're busy and you're going to take off to Europe for 4 months, and then you need another month to look for a suitable property, fine, that's fine. We'll keep your $5,000 deposit, um, at least for, actually I should have put that in there. I should put like at least 120 days. Okay. So after 120 days, if nothing happens, it becomes mine. Okay. Um, and I will have that in the agreement as well. Okay. So when you sign the agreements and stuff like that, I'll make sure to put a little, what do you call it, a little notation on there that after 120 days, the 5,000, becomes mine. Okay. All right. So anyway, let's see here. Let me continue moving on. Okay. So there are limitations to this. Because I'm a one-man show and because I'm so super busy, I have decided that for right now, I can take 10 people on. Okay. So I'm willing to take the first 5 people to sign up for the silver program and 5 people for the gold program. Okay. So uh, basically, I'll do both of those. All right. So I'll leave that up to you. It's your choice at this point whether you want to work with me or not. If this is of interest, again, I'd be happy to answer any questions for you. My name is Andrew Seeker. My company is Anchor, CREI, which stands for Commercial Real Estate and Investment Capital, LLC. And you can see my email address, my website address, my mobile phone number. And I also want to quickly mention my YouTube channel, where I have a whole bunch of videos on there, about a dozen of them that are very, very short clips. They're all under 5 minutes long, with little tips and tidbits on processing and underwriting and financing commercial real estate properties. So I'd like to encourage you and invite you to take a look at this website and watch a few videos. Feel free to leave me a comment. Let me know if there's any topic that I can discuss and create a video on, or if there's some inaccurate information, please let me know and explain it to me, because in our world of financing and real estate, things are dynamic and constantly changing, just like the interest rates are. And so if you catch a snafu on my part, please do let me know. I'm all ears. I want to know, and I will definitely correct it. Okay. All right. So anyway, I've been talking enough now, a little over half an hour. So I'm going to go ahead and stop here. I just wanted to really thank you for your time for watching this. I hope this has been very beneficial to you. I hope that you understand now that, about the 5 minute property evaluations, that you can actually do this in 5 minutes so you don't spend hours and hours beating your head over whether you want this property or not, or if it's going to be a fit. I just showed you how you can do all this in 5 minutes and either be, either go or no go, right? Your green and light, red light. So yeah, and then I've also talked about, how to add value to a property by raising the rents. Don't have the seller do it. You go ahead and just ask them to lower the price and you raise the rents. That way you can build equity faster. Don't leave that for the seller to do. Okay. So those are some of my tips and value add for this video for today. I wanted to thank you once again. God bless you so much, and I look forward to hearing from you and preferably working with you. But if not, no hard feelings. We can still be friends. I'd love to hear from you, and wish you all the best. God bless and take care.